Very excited to be here today. So what I'm going to do, guys, is I'm going to talk about my flagship options program. It's called Swinging for the Fences, but it's how I teach options. It's exactly how I learned how to trade options as well. You guys have probably seen enough risk disclaimers today. So this will be a little bit different than presentations that you've seen before that you're used to. That's me on the floor trading NASDAQ futures some time ago with the arrow coming out of my head. I've taught hundreds how to trade options this exact same way. The comments I usually get is wow, I didn't know you could do that, or wow, why don't others teach this? So it's the foundation of exactly how I trade and exactly how I teach. And I've really broken this process down, and it's been proven to help others. And many have called it just a complete paradigm shift. So I'm not asking you to believe anything just yet, but I am asking you, just keep an open mind. This works, but I'm going to make the assumption that it's very different than how you approach the markets. So overall, here's what I'm going to show you. I'm going to show you how to find and buy low-priced options so we can put ourselves in position for awesome returns without the need to stare at the market all day, without the need to worry about your position. The great thing about really learning how to buy options, and when I say buy options, buy a call, buy a put, buy a straddle, buy a debit spread, the great thing about that is you always know your risk. An example is if an option's at 40 cents and you buy 10 of them, you buy the calls, it's $400. You can never lose more than $400. You know exactly what your risk is, and then your reward, if you're right, is unlimited. So let me stop here because I'm going to go through a bunch of training today because I want you guys to see how I teach. I think that's going to be really important. So if everybody could put from 1 to 5, how comfortable are you with options? Because it'll really help the training portion. So 1 is, I have no idea what a call or a put is. And 5 is, I'm a professional options market maker. Any questions you ask me on options, I'm going to be able to answer. So if you guys could just help me a little bit, it will really, really help as I go through the education portion so you guys get a good feel. Hey, Leo, how's it going, buddy? Love when I see members on here. Okay, we got wide range. Wide range. Only got 1-5, but he's a member. That's cheating. 3s, 4s. Okay, no 1s, so that's cool. So everyone's, it seems like, has got a handle on options. Great. So Renee gave me an introduction. Just for a little bit more background, I've been trading for 18 years. That's what I've done my entire career. The last 4 years as an equity options market maker, and that's really where I learned how to fine-tune my options approach and learn how to price options to the penny. Some of the things I've done: trained over 100 professional traders, again, concurrently traded 100 different names and 1,000 different strikes. I was also a portfolio manager for a small family office in Chicago, and in my free time, I like to do endurance sports. So I share my background just so you can see I'm an expert in this area. Okay, I trade for a living. I work with a small group of retail clients. When you're trading, the most important thing is edge. And edge is what makes you different. Every single trade you make, you need to think about why. What's the reason for you being in that trade? Okay, today, as I explain this trade, I'm also going to explain why I have edge in that trade, because that's going to be really important for you to understand. Buying options, super straightforward. If you buy an option for 30 cents, you buy 10, $300 of risk. You can never lose more than $300. Never, ever, ever. So as far as money management, there's no surprises. You know exactly what you're risking when you get into a trade. Most only sell options, or most are taught only to sell options. Do some of you guys only sell options, or have you learned that buying options is scary? You can only sell options. That's the way to make money. Generally speaking, you can think of it like this. When you sell options, you're risking $5 to make $1. When you buy options, you're risking $1 to make 5. Now, obviously, if you're risking 5 to make $1, you're going to win more often than you're going to lose. But you got to be really, really careful when you're wrong. When you sell options, there's a higher, Michael, you're correct. There's a higher probability of you being right. But again, you're risking $5 to make $1. I don't really love that. My goal, guys, I want you to understand by the end of this presentation, there's more to trading than just technical analysis. I also want you to understand that others have committed to this process and are no longer searching for the best approach. And I'm going to show you lots and lots of proof. For those not really trading options, I want you to see the growth of the options market. Options notionally are bigger than the overall equity market. Options as well are just a derivative of equities. It's the same exact thing. Once you train yourself to understand that options and equities are the same exact thing, you'll look back and say, okay, well, I should have been learning this a little bit sooner, a little bit earlier. These are trades that we look for. And I wanted to do with this presentation, super excited to be here with you. I want to show testimonials from this week. So that's what I'm sharing. So this was February 8th, okay? The other day, February 8th, right here. Omeras, trading idea. So why I like Omeras, and I want a story for every trade. I want a reason for being in every trade. I'll use technical analysis after to manage my position. Omeras just lost a really favorable Medicare reimbursement. It's their only product that they have approved from the FDA, and starting January 1st, they lost this reimbursement, and it really wasn't priced into the stock. So I shared an idea, awesome trade opportunity, Omer March puts, 60 cents. Buy 10, $600, you can never lose more. Chris here just got filled at 60 cents, and I'm showing you the timeline just so you can see, here's when we suggested the trade, here's why we suggested the trade, and members are getting filled at those levels. A couple of days later, there was a terrible article that came out in Omer. We were in it early. Stock got killed. They still have to come out with their earnings in March. I think Omer is going to trade down to like 7 or under. And you can see this was yesterday. Us got the pom-poms out, just cheering. Those are the kind of trades that we're looking for. Dig deeper, do research, spend your time looking for opportunity. Options education. This is, to me, options 101. Everybody needs to understand this concept if you're trading options. And I don't see a lot of people teaching it. So here's the example. ABC stock, a phony baloney stock, trading at 10. The 12 strike calls are 40 cents. Let's buy 10. If we buy 10, $400 of risk. If ABC goes to 0, we lose $400. We can never lose more. The stock's at 10. 12 strike calls, if we buy 10 of them, remember I said options and stock did the same thing? If you buy 10 of the 12 strike calls, you're buying 1,000 shares of ABC stock at 12. Why would you buy stock at 12 when it's trading at 10? Because you get massive leverage, right? That's why you're doing it. Stock goes to 10, 11, 12, 13, 14. Stock's at 14. Let's say there's 10 days left to go until expiration. You're $2 in the money. Say the options are worth $2.20, and you want to get out of your position. You want to lock in profit. What can you do to lock in profit? You want to take off all your risk and lock in your profit. What can you do? Long 10 of the 12 strike calls from 40 cents. It's trading 14. You want to get out of that options position. You want to lock in money. You don't want any more risk. What are some things that you can do? And in options traders, 101, this is You're in a trade, you got to get out of it, right? What would you do? Okay, we can sell it. Just sell to close. So you're long 10 calls, sell 10 calls. What else can you do? Because I don't want to do that. Let's say you don't want to do that. For me, it's giving up the most powerful thing you have, which is your optionality. So I want to take off risk, but I don't want to just sell my calls. So another thing that we can do, what about selling 1,000 shares of stock? Has anybody thought about doing that? You're long 10 of the 12 strike calls for 40 cents, 400 bucks. At 14, we sell 1,000 shares. What I did is I locked in $1.60 winner. 14 minus 12 is $2, less the $400, right? So I locked in $1,600. If ABC stock goes to 100, I don't get to take part in that because I'm long from 12 and I'm short from 14. Michael, yeah, short the stock. The reason we do this is because with 10 days to expiration, let's say ABC stock comes out with accounting problems and it gaps down. If it gaps down, if you would have just covered your options, you would have been flat. You wouldn't have been able to take advantage of this. If you sold 1,000 shares, the stock goes down to 5, buy your shares back, you make $9,000 and your calls are worthless. That's why we want to learn how to manage your options with stock. Here's something some of my clients are sick of. Spending more and more money online, buying another indicator, buying another system. Can anybody relate to this? You've invested a lot of money, but you haven't really learned anything. You're more of buying tools and shiny objects, but if they don't work, there's really nothing to show for it. But you're gonna lose, oh, Mina, saying you're gonna lose money on theta, going back to that last example. No, not true. Not true. Learn, educate yourself. Learn the fundamentals of the market. There are no tricks. There's no easy way. Okay, there's no pixie dust. We want to make good decisions. Swinging for the fences is a great strategy because you're risking small to go after big, big returns. I'm going to show you another example of a trade. This was a little bit ago, but it's a really, really cool story, and I think it'll help you see how professionals look at the market. SRPT Sarepta is a stock I follow very closely. They were coming up on their PDUFA date when they announced whether their drug's approved or not approved. As someone who follows this stock closely, I know the FDA is split 50-50 on whether they're going to be approved. 3 days before the FDA announced whether the drug's approved, Ronald Farkas leaves the agency. Sarepta's nemesis. That's weird. So what I did, sent a trade alert out. Guys, all of a sudden this guy leaves the agency. He was the biggest nemesis of the stock. And then 3 days later, stock gets approved, goes up to 60. Now, I didn't know it was going to get approved. You can see from what I wrote, I want to buy upside calls. If it's approved, the stock will trade 50, 60. But if it's not, we know exactly what our risk is before we get into the trade. And that's really what we're looking. I'm not posting this to say, hey, look how prophetic I am. I call the stock going up $50. No. The good trade was we had a fixed amount of risk and put ourselves in position for awesome upside. Stacy here, going to be stuck with you for a while, tripled his money very quickly, long 3,500 shares from 28. That's $114,000. Taurus calls me the ambassador Quan of his trading world. Okay? I had to look that up. It was nice, but I had to look that up. I would have thought the drug declined if the head is leaving. Michael, that's someone who works for the FDA, not someone who works for the company. So again, I've heard this comment hundreds of times before. I was told never to buy options. The key difference between buying and selling options. Whenever you buy, it's a debit. Whenever you sell, it's a credit, okay? So buying is buying a call or buying a put, buying a straddle, buying a strangle, buying a debit spread. Selling is the opposite. Very generally speaking, when you buy options, you're gonna lose more often than not. That's okay. But when you win, you gotta make money. You gotta cover those losers. So estimating, you'll lose 60 to 90%, you'll win 10 to 30%. Whenever you buy an option, you're long volatility. You want craziness, you want movement. The opposite is when you sell options. When you sell options, you want everything to just go to sleep. You want everything to hibernate. You don't want anything to move at all. You're gonna win most often, but when you lose, you're gonna get hurt. When I hear people blowing through trading accounts, it's because of credit spreads. It's because of selling options. It's the same thing over and over and over. When I talk to clients and they tell me they blew through an account, it's because they were selling options. I brought up this slide because I want you to see the importance of volatility. Options are run on volatility. In front of you are 5 different inputs. These inputs are used to price options. These are the only 5 inputs for the Black-Scholes model. The Black-Scholes model is used by like 97% of the street to value options. It's actually pretty simple. There's only 5 inputs. Let's use Apple for an example. If I'm going to trade an Apple option, the underlying stock price, I know what it is. It's given to me, right? Any of us can look for it. I know what the strike price is. I know how much time until expiration. I even know the risk-free interest rate. Use a 1-year, use a 2-year, it doesn't matter. The only thing that I don't know, the only thing that we need to solve for trading options is volatility. It's the only subjective component. Really, what I want you to take away from this slide is if you're trading options without a concern for volatility, hopefully you can see from this slide what a disadvantage you're at. The only subjective component that you need to figure out, you're not even thinking about. That's how important it is. Here's an example of how volatility affects the pricing of a stock. Same ABC, phony baloney guy. On the left is a low vol stock. A low volatility stock is, let's use Microsoft as an example. On the right, a high vol stock, let's use a gold miner. Let's use a solar stock. Let's use anything with blockchain. The only difference between these 2 stocks is the volatility. 30% on the left, 70% on the right. In this example, we have 30 days to expiration. Stock's at 20. Now this low vol stock in the last 2 months has been between 1950 and 2050. It really hasn't moved very much. If I want to buy the 22 calls 10 times, it's $100. So it's going to cost me $100 to get long 1,000 shares of stock at 22. Why would I want to do that when the stock's at 20? I get massive leverage. 30 days to expiration. Do we think that this stock could trade above 22? If yes, that's a good trade. If no, it's not a good trade. The market is pricing a 0% chance of it getting to 24, a 0% chance of it getting to 16. That's what the market is pricing. On the right here, this volatile stock has a range in the last 2 months of 15 low to 25 high, and it just keeps going up and down, gyrating back and forth. 22 calls are 80 cents. 24 calls are 30 cents. Look at the difference in prices. The only difference is volatility. On the downside, the 18 puts are $1. The 16s are 70 cents. That's the difference in volatility. Those are the only difference between the pricing of these options. A couple of fun questions for you. Why did I make the downside more expensive than the upside? The upside, $2 higher is 80 cents, $4 higher is 30 cents. $2 lower is $1, $4 lower is 70 cents. Why did I make that downside more expensive than the upside? Did I make a mistake doing that? My kid get control of my PowerPoint? What's the reason? Why are puts more expensive than calls in this example? Ray, excellent. Skew, S-K-E-W. The market is skewing this stock to go lower by pricing the downside higher than the upside. The other reason why most stocks have a put skew to them, with downside more expensive to upside, is I'll give you a little market maker perspective. I was a market maker for 4 years. As a market maker, we know what the public wants to do. The two most popular option strategies for the public are going to be 1, covered calls, and 2, buying downside puts to hedge your portfolio. So the market maker knows that covered calls are buying stock and selling upside options. So if I know that the public wants to sell upside options, what am I going to do to that price? I'm going to make it real low, right? So I can buy it as a market maker as cheap as I can. I want all the edge. On the downside, I also know that the public wants to buy puts. So I'm going to make those really expensive because, again, I want all that edge. That's why things are priced as they're priced. The only industry that's consistently priced with a higher upside skew, higher calls than puts, are biotech. I'm guessing your last few trades in biotech, you were probably buying upside calls. The public likes to buy upside calls in biotech. SRPT, again, 55 last traded price, $25 higher, $1.70, $25 lower, only $1. Public likes to buy upside calls in biotech, so those are going to be skewed to the upside. Another trade this week, Snap. I love Snapchat. I love it. I love it. I love it. Snapchat, it was my favorite pick of 2018. Snap, I suggested it right here, and I'll show you exactly when I suggested it. It went against us for a little bit, but not much, and now it's flying higher. Today it's going higher more. I think Snap's going above 30. You can see Mark, that, thanks Jonathan, that was a really nice fat profit, February 6th, 10 days ago. February 6th, February 7th, just $600 investments now worth $3,400. I think Snap is going way higher. Now, the biggest thing that when I work with clients is mindset. And Pablo here puts FOMO is fake, fear of missing out is fake. That's another thing I say all the time. That's something you create in your own head. Don't chase trades. You want to just protect your capital. It doesn't matter what you trade. Your trading account is what matters. And you need to find the right balance. Snap was the first trade with me. Chris here, 15 calls, sold 200 shares. He is selling stock to manage his position. That's called scalping gamma. That's something that we teach as well. Snap, teaching us how to fish. Don't be dependent on anybody. Snap, just made 4.5 times my money. Vinter is a lockup trade. I'm going to explain those lockup trades and Snap. Now, a question I get all the time is, Jonathan, I want to work with you. If I want to work with you, what kind of returns can I get? And the answer that I always give, and the answer that I'm going to give you, if you have 10 people doing the exact same trade, you're going to get 10 different results. And I get these comments all the time. Here, I'm on a trial. Just joined, I bought Snap Tuesday because I was talking about Snap. How are you going to manage the downgrade? One of these companies downgraded Snap. And for me, I'm going to write a letter thanking them for offering the name for a sale price. Because if I liked it at 14, I love it at 13.50. Here, should have shorted the stock at the open. Now, this guy who's trying out the service, he doesn't like me. He thinks I'm a dummy. He's on to the next guy. Someone who puts trust in me and who learns and understands makes 4.5 times his money. You're going to get 10 different results if you have 10 traders doing the identical trade. This guy reached out to me out of the blue. Very flattering. Anybody ever hear of Jim Cramer? He sent these emails to a friend after coming across my content. This guy is great. Wow. This guy's amazing. I think he's a star. Tell him I want to be on his podcast. Out of the blue, Jim Cramer emails me saying, I want to be on this guy's podcast. I didn't have a podcast. So naturally, what do you do? And someone with 1.5 million Twitter followers says they want to be in your podcast. I set up a podcast. I had Jim Cramer on my 4th episode. I had him on for 30 minutes. We had a really, really great discussion. So this was very, very cool. I want to tell you about one more trade that is awesome for retail traders. And it's a lockup trade. Is anybody familiar with lockup trades? Okay, so when a stock IPOs, they meet with investment bankers. They come to a price that they should IPO at. Now, a lot of the stock that's owned by the company is restricted. And it's restricted because they don't want employees selling all their stock right when they come public. So LAUR is an example of a lockup trade. They IPO'd February 8th. 35 million shares were trading. Lockup is 6 months later. At that time, 133 million shares that were previously not allowed to be traded are not restricted anymore. You can trade them. But the average daily volume in LAUR, it's only 300,000 shares. Shared a trade idea, buy the 17.5 puts. When I teach lockups, I want you to think like you're an employee. Think like you have the stock. LAUR, IPOs 35 million shares. Let's say you work for LAUR, you got a $100,000 bonus, but they gave it to you in stock. And they said, hey, we're going to give you a $100,000 bonus in stock, but you can't sell it for 6 months. Okay, fine, cool. Goes public, 35 million shares. It rallies up to 15. Your 100 grand is now worth 130. You're excited. You want to sell, but you're not allowed. It goes back down. You're bummed. Starts to rally. You want to sell 15, 17, 18. You really, really want to sell. Your 100 grand is worth about 150. You're not allowed to yet. Shared a trade idea with the membership. 133 million shares. 133 million shares that were previously restricted on this date are no longer restricted. That's an avalanche, guys, of supply coming to the market. And there's not the demand to meet it. So naturally, what's going to happen? The stock is going to trade lower. That's a lockup trade. Judge here hit his lockup trade and snap. Sec over here, teaching you how to think. That's what it is. So Michael, thank you. Michael says, awesome idea. So these kind of trades, you can't learn in a book. You're not going to learn how to scalp gamma in a book. The reason we scalp gamma on long positions, because what are you losing when you're long? You're losing theta. So you scalp gamma to get back your theta. What's the opposite of theta? Does anybody know that? Who's not a member? What's the opposite of theta? Theta comes out of your options, right? Every day a little theta comes out. What's the direct opposite of theta? Gamma. That's it. People get confused with gamma. Gamma is your opposite of theta. That's it. Simple, simple, simple. Okay? Let me stop here. I have about 15 minutes. Do you see the potential in learning how to properly do this? And notice we didn't talk about technicals. Technicals are fine, but it's one feather in your cap. I use technicals for entry points, for stops, to manage my position. What this is the foundation to trade forever, because we're looking for stories. We're looking for real reasons behind every trade that we do. And if we don't have a great reason, just don't do a trade. There's no risk. What I found is if you've been trading for a while and you're not getting great results, you need to stop and reevaluate. Change is hard. I get that. Change also takes time. But if you think about it, what takes the lion's share of time is thinking about changing. The actual change happens fast. So hear me out. I think you'll see there's no BS, no games, just real information and someone who's going to always be by your side. Swinging for the fences covers everything you need to scan, to find, and to trade these type of option plays. But again, it's the foundation of how I teach to trade options, any kind of options. Okay? What I look for when I trade or when I'm teaching people, are they stubborn? Can they admit fault? Are they coachable? I mean, imagine you're the next testimonial that needs $1,300 to double their account. So why this became really popular is I believe that I could teach options as good or better than anyone that I've seen. I do. I wanted to go through some training so you got to see that as well. Anybody in my options program, my flagship options program, you get a live class the last Wednesday of every month, forever. When I first rolled this out 2 years ago, it would include one live class. But after talking with people, they felt like they were alone. They felt they'd go with that one class, they'd have questions, and then they'd have to go buy another product or whatever. So now, with this, anybody in my options program, you get a live class once per month forever. You're always invited. It's a one-time payment. After 2 years, you'll have 24 classes, 24 hours of recording. Okay? Who's this for? Beginners. If you never looked at an option chain before, sure, it's going to take some time. Just like if I went and worked for you. I'm not going to learn your profession in 3 days. You're not going to learn my profession in 3 days either. But we structure in a way that you get live classes once per month, so you know that we're not going anywhere. Okay? Newer to options, same thing. It's the foundation of how to trade options. Even experienced traders, it comes down to, are you coachable? Okay? I asked a lot of questions on here, didn't see very many answers. Position management is going to be your #1 thing. Learning all the different possibilities that you have in order to manage your position. So here's what you also get. You also get a 2-hour workshop that you can start watching now. I want to make sure that you have content to watch immediately. Okay? The benefits, you know what your risk is every time, guys. It's defined. Set it and forget it. Put that trade on. Walk away. We put that snap trade on. We didn't stare at snap every second of every day. We had a reason for being in that trade. We put the trade on. Let the market do what the market's going to do. Straightforward. It's going to protect you because you're buying options. You're buying options. You're long volatility. If the market goes down 1,000 points, the VIX is going to go up 500%. You're long volatility. It really is the foundation to trade options forever. Here's Paul. Paul sent me an awesome video. In that video, he said the 2 biggest benefits to working with me is 1, he has time during the day to play golf, to spend some time with his wife, to go out for lunch, because he's not staring at the screen the whole day. The other thing, his account's doubled. 2 awesome things. So what you're going to get, you get the 2-hour masterclass, you get live classes forever. That's it. You'll find it's a fresh perspective. These are the comments that I get. It's amazing how you can manage your positions. I never heard about this. I was subscribed to a lot of different services, but only yours gave me real education. It's going to be a fresh perspective. It's a different way of looking at the market. I also want you to learn how to manage your position correctly. It's by far the most important thing. So I'm including another 1-hour workshop called 3 Ways to Manage Your Options Position. So you'll get the 2 hours, and then this is a 3rd hour plus live classes the last Wednesday of every month. I asked for my swing clients for some feedback. What's your favorite aspect of swing? You can see out of 32 people who responded, 32 out of 32 are extremely positive. Gamma scalping, big money potential, monthly classes, consistency, Jonathan's honesty and passion, Q&A and review, learning to fish on your own. It's a fresh look, common sense, genuinely helpful spirit. 32 out of 32, 100% positive. I love working with clients. I receive unbelievably sweet emails. The ones that make me the most uncomfortable is when someone says, "You're so smart," or "You're a genius." I'm no genius. I'm not the smartest person in this room. I guarantee that. But what I offer is an expertise in a very, very specific thing. I'm smart enough to know that I don't have all the answers, but I'm also smart enough to know that my skill set presents real edge for anyone who wants to learn how to trade options. The overall offer, you get the 3 hours right away, live classes once per month, forever. At this time, I like to say you have a choice. Don't change, do the same thing. Maybe take a few of the nuggets, learn, improve. Or 2, commit to doing things differently. Commit to becoming a more complete trader. So for the price that I'm going to show on the following page, I really appreciate being with you at Invest for Inspiration. This is good for a limited time. So value this opportunity. Unlimited classes from a professional trader. 3 hours of real content you'll get immediately, no BS. I have one more thing to add. I also want to add a 1-hour workshop on lockups. I know people get excited about that lockup trade. Our last lockup was VNTR. January 25th, you can see VNTR, yippee, 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 locked in 100% gain. You know, these are really good trades that make sense. You just need to learn how to find them. Come on. One more time, the entire offer. For anybody who wants to move forward, I look forward to working with you. It's a one-time charge. This is not monthly. This is all options education. For anybody who wants to move forward, it's not $497. It's $297. You're in the community. You get classes once per month forever, and you get those 4 hours that you can start watching immediately. Just a little understanding before I get into any questions that you have. Swinging for the Fences is where I teach options education. It's my foundational options program. You get 4 hours immediately. You get a live class at the end of every month, Wednesdays. There's no selling on there. It's just all options education. For trade ideas, for trade recommendations, I share trades every Sunday night with the membership. The membership is where I share trade ideas. Swinging for the Fences is where you learn. If you're just a member without the education, you're going to be extremely overwhelmed. I share 8 to 12 trades every single week in the membership, but you need the education. You need to learn how to do it. Here's an example of feedback I got 2 days ago. I receive this kind of feedback all the time. I'm with you permanently for my source of investment education. Never forget the great work that you do. A lot of people are out there getting taken advantage of. That's why I wanted to make this class available forever. Okay? I put a link here, so for anybody who wants swinging for the fences, guys, it's going to be activedaytrader.com/swing. Renee was nice enough to put that in the chat. And then I would suggest going with swing and then also doing the 30-day membership for $7. And in that membership, you're going to get the trade ideas. And then we do a live, a 30-minute Monday morning overview of those trade ideas. But again, you do need to learn, okay? I'm sharing lockup trades in there. I'm sharing areas that we're looking to scalp gamma. And we talk about trading a portfolio, okay? Earlier, I showed you that example of somebody who was with me for a trial, got frustrated with Snapchat, ran for the hills, was on to the next guru, while everybody else in the membership ended up making quite a bit of money. Adrian, I'm sorry. So the membership is going to be activedaytrader.com/trial. It's $7 for 30 days, $147 after that if you'd like to continue. Also, for swinging for the fences, there is a 30-day no questions asked money back guarantee. So it's $297, you're all in. After 2 years, you'll have 24 classes. But if you don't like it, just return it. You're good. I do that because I want you to try it out. I want you to see the difference. Hopefully, if you've been on with me since we started talking, you've taken something away from it. Okay? That stuff adds up. It's the little mistakes that we need to stop making. Okay? Michael, we teach how to scan. We teach a couple of different scans and how to find these different trades. Okay? It doesn't work if you're just dependent on my trades. What works is teaching you how to fish forever, really teaching you how to value options. Look at options just like you do stock. It's the same thing. Options are a derivative of stock. Okay? Yeah, so Michael, this is two different things. The swinging for the fences, it's $297 one-time payment. You get classes once per month. And then the membership is where I share trade ideas. That does need to be learned. activedaytrader.com/trial for the 30 days and /swing gets you into that $297, the 4 hours of content right away, along with that lockup video, which people get a big kick out of. Okay, activedaytrader.com/swing. I think I have 2 more minutes if there's any other questions. I know I have some questions coming through that I probably missed, so let me go back. So Michael, you always want a story. You know, trading stocks with a story, it's just more scalable, to tell you the truth. Will give you more confidence. Okay. So again, guys, thank you very much for having me. That was a lot of fun. Renee, thank you so much. If you guys have any additional questions, you can email me directly, support@activedaytrader. Happy to get back to you.